Well, the markets are doing very well, but the space to be on your radar is banks. So we have plenty of banks in focus. It was a mixed performance from Union Bank of India in Q4. There was a sharp decline in net interest margins while the slippages surged sequentially. Lata is here to take that discussion forward with the management of Union Bank. Lata, over to you.
Thanks a lot for that, Sonia. Yes, banks have generally done well. HDFC Bank, in fact, the HDFC twins, which were the laggards, have now turned positive, and that itself has been a shot in the arm for the banking sector. Well, we now have with us the management of Union Bank of India. Mani Meghalai, the Managing Director and Chief Executive Officer, joins us. Good morning, Mrs. Mani Meghalai. Thank you very much for joining us. Well, first up, the OPEX. I think that is what took everyone's breath away. The huge employee cost. Is the, that 50% rise in OPEX entirely because of this higher wages to employees?
Yeah, Lata, before I just get into that subject, let me just give you a brief on what we have done for the this quarter and the whole year, of course.
No, ma'am, we'll do that. We are going no, Mrs. Mani Meghalai, we are going to do that. In fact, we have thoroughly read out your numbers over Friday. Fine. And therefore, we will take it issue by issue, and I'll give you every opportunity to speak about the big achievements of the bank as well.
Okay. So what we have done is our expenses on, employee expenses have gone up to about 45.67%. That is because we front-loaded our pension provisions to the extent of about almost 1,200 crores. Wage revision of about almost 560 crores is also what we have taken into account already. And that's the reason that it is, seems to be a little bigger. But because I've already done whatever the provisions that I had to make for 5 years, I've already taken for the current year. I will not be incurring that expenses in the next 5 years at least.
Okay, that's extremely positive. But the cost to income ratio rising to almost 50%, 49.5, also is accounted for only by the employee cost?
Yes, that is because of the employee cost alone that we have been able to, we are at this number. For FY23, it's at 46.27. And for the Q4, of course, it is 49.53%. That's a little bit of hike if you compare to Q4 of 2022.
Okay. And now the other, I'm just taking out the problem points and then we'll talk about the growth story. The margins. Yeah. It was expected that as RBI starts raising rates, at some point in time, it will start impacting the banks. But almost all banks have announced increase in margins. Why is it that yours has fallen quarter on quarter by a good 25 basis points?
No, our net interest margin is, if you look at Q4 FY22, it was 2.75. And Q4 FY23, it is at 2.98. And for FY22, it was 2.94, and as on today, it is at 3.07. The net interest margin is actually not fallen. It's, increased to about 3.07 from 2.94. There is a 13 bips increase in the NIM, actually.
No, I agree. If you look at it year on year and average for the year, your numbers are absolutely correct. But, yes, for a trend, only for margins and NPAs, one tends to look quarter on quarter. Okay. And there you did a very good 3.21 in Q3. That it should have fallen so much gives the fear that in the current quarter, you will probably report another 20 basis points lower.
Yeah, I'll just tell you that from September onwards, we started increasing the deposit rates. And deposit rates were quite high for the past 2 quarters. And that's the reason that the NIM has actually, if you look at QOQ, it has fallen. But if you look at my MCLR book, it's about 50% of my loan book. And this loan book is, it is getting reset every quarter. So on the due date, it is getting reset. Just about 50% of my loan book has been reset with MCLR. And what we are observing is during the current quarter, we have got about 40,000 crores of loan to be reset. And the next quarter also, we have got some loans to be reset. So I'm sure that, the NIM will be maintained to at least 3%, that what guidance that we have given.
Sure. Okay, got that. What part of your book is linked to external benchmarks, to EBLR? Nothing at all?
Yeah. Yeah, EBLR is about 40% of my loan book is linked to EBLR and 50% to MCLR. and the remaining 10% to base rate and the others.
Got it, got it. So you do have some elbow room for lending rates to rise.
Yes.
Okay.
Yes.
Now, if I can also dwell a little bit on slippages. I mean, the overall slippages is not worrying, at an annualized rate of 1.38. But nevertheless, it has been higher than the previous quarter. You have done 2,794 crores in slippages versus 2,567. That becomes a worry. Do you think that will continue?
Yeah, we had fresh slippages to the tune of about 2,687 for this quarter, of course, and previous quarter it was 2,305. And total slippages were to the tune of about 12,000 crores, 12,500 crores. We have seen slippages, but we have seen upgradation also in this. Almost like 4,000 crores, we have seen upgradation in the fresh slippages, which has, of course, added to my total, recovery during the year. Almost 20,142 crores I've been able to recover during the whole year.
Okay, now, ma'am, some of your accounts have gone to NCLT and to that ARC. What kind of recoveries are you penciling in for FY24?
ARC, I have not given anything during the current year, of course, but NARCL we have given, there is about 42 accounts which has to go to the NRCL during the year. They have identified about 42 accounts. Out of that, 24 accounts is where we have a stake, and that is about 10,800 crores. And out of that, as of day 2 accounts have been, already we have seen some resolution and we have got the money. So slowly we are looking at NARCL. And with regard to other accounts, with regard to ARC, we have actually not sold any to the ARC. And during the current year, we have identified certain accounts and we will be looking at the ARC portion also.
No, I meant NARCL. Any recoveries that you can pencil in from NCLT, from all the assets that you are looking for resolution?
Yeah, last year we did 2, and I cannot tell you which one as on date, which accounts we have got. We are not very clear on those things. Maybe in this quarter we should be able to tell which are the other accounts that we will be concentrating on in the NARCL also.
Okay, so your overall comment now, ma'am, on the quarter gone by, and how do you expect FY24 to shape up in terms of growth, deposits, everything?
Yeah. FY24, we have given a guidance to ourselves in the deposit growth of about 8 to 10%, advances growth to about 10 to 12% is what we are looking at the advances growth. We are looking at slippages down to about 12,000 crores and recovery to the tune of about 16,000 crores. That is what we are looking at, and we hope that the financial year FY24 would be better than what we have done for the current FY23 also.
All right. We'll leave it at that. Mrs. Money Meghalaya, pleasure speaking with you. Thank you very much indeed for joining us.